Mitchell, good to see you and appreciate your time. Thanks for staying back to do this with us. So key question, I guess, is, look, is it safe to come out in Chinese tech? I mean, $1 billion, Ant paid up, 400 million, Tencent paid up. So is it like, okay, pay your fine, move along, all's good?
Yeah, so look, Martin Street, thanks so much for having me on. And just one clarification, we invested in Ant back in 2018, and then we first invested in Alibaba Group back towards 2008. So have known the teams for a very long time. Look, you wouldn't think $1 billion fine would then make, Alibaba, go up 8% on Friday. But I think it was one of the reasons for it. Look, I think investors are cautiously optimistic, potentially, that now with this $1 billion fine, which, in the grand scheme of things, it's a huge amount of money. But in the grand scheme of the whole company, it's very small. That hopefully, better times are ahead and more certain times. But, I think it's really a question. In the U.S. and global investors need to get confident in all these Chinese stocks that if they buy them again, they're not going to. The regulatory environment's not going to change again in 6 months. I think that's like the biggest risk, or 9 months, or 12 months, or you pick it.
Okay, so Mitchell, what would give you as a foreign investor in some of these tech giants that confidence? What would you need to see?
Yeah, that's a great question. I think it's partly a function of time. Investors seem to have short memories. Like, remember when people said Facebook was disappearing? Well, it was after the IPO and it got cut in half, and now it's 8x that or 10x that or more. I think it's partly a function of time. Two, I think it's a function of seeing these Chinese companies, Alibaba, Tencent, Ant, Baidu, performing, just the numbers coming out and not seeing unexpected news out of China. Look, hopefully we're going to get some, hopefully, the U.S. government and the Chinese government seem to be engaging in more productive talks now, which is all a bunch of nonsense. We all need to work together in this world. It's crazy. Neither of them, I don't think, can survive without each other. And so I think part of it is time, and part of it is just seeing less uncertain news events, happen. And that's what sounds like it's happening. If the premier is meeting with top internet execs, and I do think that China needs their economy to grow, and a great way to do it is to empower these big internet companies to help grow the economy. I think they have the potential to do it.
Mitchell, Ant Group, as we all know, denied the opportunity to go public because of Beijing's regulatory stance. How problematic is that in terms of the exit strategy for you at Lead Edge Capital and the picture for returns?
Yeah, that's a great question. So at the price, I am always skeptical of selling into a company buyback, whether it was the ByteDance, which we're small investors in, whether it's Ant, they know more than I'm ever going to know. And if they're buying shares, I typically would want to be a buyer, not a seller. I think what they're doing is admirable. They don't have to do a buyback, and I think they're just telling all their investors and employees, hey, you've been in this for a while. If you want to sell, this is the price we're selling. Nobody's putting, a gun to your head saying you need to sell. And, at these prices, I'd be a buyer.